Hi, fitness professionals. This is Eric Killian from the Fitness CPA. We're going to give you a breakdown on all of the things you need to know in the next round of the government stimulus program. This was just signed into law about an hour or so ago. We've had this content ready. We're excited to get it to you and explain what this means for your business. There are some personal provisions. We're not going to touch those as much. I think everybody here is concerned about how their fitness business can survive and thrive as we get into 2021. So we're calling this PPP round 2 and the new stimulus package. We'll go around to the big key points, just your takeaways. If you just want to hear this and then kick off, we'll have the rest of it in a lengthy blog post. You can read all of the details there. And of course, as always, if you have a couple of quick questions or a quick question, go ahead and fill out our contact us form. We're answering as many questions as we can free of charge. Just want to help out as many people as possible, get these fitness businesses back in and doing what they're supposed to be doing and getting really to the end of this coronavirus pandemic. So the first thing is loan forgiveness is now simplified. We've been talking about this for a long time, but bottom line is wait to complete the forgiveness application in most instances. More coming soon on this. PPP borrowers do not reduce their forgiveness by EIDL amounts. So a lot of people were getting $10,000. This is from EIDL that they had to back out of their PPP. This is a $10,000 win. Expenses paid with PPP 1.0 and 2.0 funds are fully deductible, and PPP funds received are tax exempt income. This is a really big tax win, needless to say. The Paycheck Protection Program PPP 2.0 includes a second draw option. This is the one we've been hearing about or kind of excited. How much can we get? What's going on? We'll cover that more in a minute. And they'll be able to get into that program if you've sustained more than 25% revenue loss in any quarter of 2020 as compared to 2019. And that's going to be most of you guys. The SBA 7A loan payments that were made on behalf of borrowers for 6 months in 2019, it was roughly March or April through September. They're going to be tax exempt income. This is again a big tax win. SBA loan payments made on behalf of borrowers for the 3 months beginning February 1st, because there is going to be another 3 months of SBA loan payments, are also tax exempt income. Isn't that awesome? The targeted EIDL grant for $10,000, if you didn't get the $10,000, you may now apply for it. There's a lot of stipulations, and I'm going to say most people won't qualify, but there'll be a chance you can. And if you do get it, then that's $10,000, so certainly worth a chance. There is potential for newer increased EIDL loan amounts, but it remains very unclear. I'll update my date on this. This is as of the 27th. Nothing's changed here. There seems to be funding for EIDL, but we don't think it's going to be additional or a round 2 of EIDL for those of you who already have borrowed and exhausted your EIDL funds. And there is expanded and retroactive employee retention credits. It's a bit unclear. We're waiting on guidance from the SBA and the U.S. Treasury. Let's jump in. How do each of these points apply to you, and what do they mean for your business? So stay tuned. What's going to happen here is we're going to see a round 2 of the PPP 2.0 applications. We're going to have new PPP forgiveness forms, and additional guidance on all of this is it's going to change just like before. Some of the things I'm saying now may be altered slightly, maybe completely reversed by the U.S. Treasury and the SBA's interpretation of these guidance. Just as a quick refresher, Congress passes laws, the president signs them into law, and then I should say Congress and our representatives. President signs them into law. The U.S. Treasury interprets those financial laws, and then as a lot of those pieces are administered by the SBA or other branches. And so we've got a lot of players involved here that don't always take Congress's exact written law as it was intended. But stay tuned. Subscribe to our YouTube channel. Subscribe to our newsletter. We will be keeping you up to date as the landscape changes, and our Facebook page will have some updates as well. So let's get into some of the specifics, because the specifics do matter. A lot of these things here, we need to get into the nuances in order to understand them fully and really know whether or not you could take advantage of these items or not. So loans with the PPP loans of $150,000 or less for round 1 and 2 now are going to be much more simplified. This is exactly as we were hoping would happen. We've blogged about this in the past. We thought this was going to happen. We've been advising you and other borrowers to not complete the forgiveness application. Don't do the paperwork. Don't send them reports. There can be quite a bit of paperwork that's involved here. And as expected, they moved the bar a little bit closer. So it makes it easier for taxpayers, accountants, and bankers across the nation. So the new application is going to be simple, painless, one-page document. Can almost certainly do it yourself if you have less than $150,000. It's possible a bank may still ask for some documentation, but it doesn't seem to be the intent. And so what we're advising here is just hang loose, give it another month here. It'll probably realistically take until the end of January or longer for this new application to come out, for your bank to have it, and then the SBA be ready to accept it. But this new application is going to help streamline the process for a lot of people. So our recommendation, you should be waiting for the new application and not completing the current one if you don't like paperwork. So that's a lot of us here. If you have an EIDL loan, right? If you took an EIDL loan out, which we'll cover in a minute here, you're definitely going to want to wait on the PPP forgiveness. That's a certainty. And then if your loan is greater than $50,000 but less than $150,000, you're kind of in that gray area where they definitely made it streamlined for you. And so these people here almost certainly want to be waiting so that they don't have those very large onerous requirements. If your loan was less than $50,000 before, the application wasn't terrible, but banks were still asking for supporting documentation. And so our goal was to have as little paperwork as possible. And so when might you still want to complete the current PPP forgiveness application? You might want to complete it here if your loan is less than $50,000 and you don't mind submitting some paperwork and you don't have an EIDL loan. If you've got an EIDL loan, don't do the PPP forgiveness application. But if you're less than 50 grand, you don't have EIDL. Now, at this point, I don't know who doesn't have an EIDL. Most people do, but certainly if you've done okay, maybe you didn't need the loan, you didn't borrow it, that's okay, and you're less than $50,000 from PPP, then go ahead and submit a little bit of paperwork to them if you don't mind, or you can just wait. If your loan's greater than $150,000, then you're going to want to probably proceed anyways. There's no urgency right now. Most borrowers still have until February or March before their loan payments start kicking in. But if you're over 150, you still have the same application requirements. You still have to do the same form. They're not making this any easier for people who have greater than $150,000 PPP loans. So just go ahead and proceed with your CPA or accountant, or if you have an internal team to get that done. So this right here, let's see, let me make sure I've got all my notes. Expenses paid with PPP 1.0 and 2.0 funds are fully deductible, and PPP funds received are tax exempt income. Heck yeah, we've been waiting on this one. Very excited. It took an act of Congress to correct the U.S. Treasury's misinterpretation of the original CARES Act, but we do finally have it. These monies were never supposed to be taxable. We don't know why the U.S. Treasury and Steve Mnuchin over there interpreted them a different way. They knew what Congress's intent was, and so this has been in the news for weeks. We've been trying to do tax planning for our clients and knowing, hey, are we going to need to budget for tax on the PPP funds? What is going on here? And so I'm incredibly thankful that the representatives did get this right and went ahead and overrode the U.S. Treasury by passing yet a second stimulus package that clarified that even further to really bring home the point. And so rather than previously, we would have to, as taxpayers, reduce our expenses, which would result in making the PPP monies taxable. And so now the PPP funds are tax exempt. That means a lower tax bill for all PPP recipients for 2020. It also means a little bit more work for you or your tax accountant at tax time, but it's well going to be worth the hassle. We don't know what that form is going to look like or where we put that information, but it's going to be an additional process in your tax preparation for this year. And so you should expect your tax accountants to look in trying to gather additional information from you, and then B, it's probably going to be an additional, small line item charge for everybody who's got PPP on their 2020 tax filings. And so, yeah, again, this is as intended and lower taxes. All right, this is the main headliner. Everybody's talking about PPP. We're going to call it PPP 2.0. They're calling it a second draw program. It's $284 billion for PPP 2.0. And so, what do we need to know? How and when to apply for this? This is going to be likely the first half of January 2021, we hope. We'll believe it when we see it. They claim that the infrastructure is already in place because banks have already done these programs. But, we're already at the end of December right now. Banks, our representatives, people are probably going to be out and doing nothing until the first week of January. I'd be surprised if we saw this the second week of January, but probably right in that first half time frame. But be patient. I don't think we're going to see the mad rush for it we did before. So who qualifies for this PPP? If you're reading this or you're watching this, chances are that you do qualify, but many fitness businesses have done really well or have steadily grown through the pandemic. One-on-one personal trainers, people who pivoted early to virtual or hybrid offerings. And so not everyone in our industry is going to qualify, but you must have been in business as of February 15th. You must have less than 300 employees. And you must have had a 25% reduction in 2020 quarterly income as compared to 2019. We believe we'll do a second post on this so that we can help you calculate or give you examples of what it means. But basically any comparable quarter, if you have first quarter, is unlikely to be down a lot compared to 2019. But second quarter 2020 is almost certainly going to be down compared to second quarter of 2019. So I would check that quarter first. As people started to open back up into the third quarter, it's a possibility. And then in the fourth quarter, maybe as the pandemic started, rebounding again or having an increase in cases, an increase in shutdowns. But you only need one quarter to qualify for the program. You don't need to qualify for multiple quarters. And so you can use Q4. Q4 is not over as of today, but once it's over, there is a clause in the law that you can use Q4 if that's better for you. And there are special rules for businesses that weren't in operation in 2019. Basically, you've got to go back and look at your January, February, March earnings and then compare those to the remainder of 2020. And there's an anti-bankruptcy law. So if you're currently in bankruptcy, you won't be able to participate in PPP 2.0. Sorry, that ship has sailed. So how much money, are you going to be able to get from PPP 2.0? You're probably going to hear conflicting information. Let's just get it right from me and get it right. 2.5 times the average monthly payroll for the 2019 calendar year. So that's a full 12-month period. Previously, they allowed us to do some staggering dates. It's possible that some banks will allow you to do this again, but I'm not counting on it this time. I think we're going to get a full 12 months for 2019. Or you can use the 2.5 times average monthly for the preceding 12 months prior to the date of your application. So if you apply in January and you want to use all 12 months for 2020, you can do this. Now, for most people, it probably means that if your payroll costs have gone up in the preceding 12 months, as compared to 2019, you're going to want to use the preceding 12 months. You're not going to want to use those 2019 numbers. For most borrowers, this won't be the case because in order to qualify, it means your receipts are down by greater than 25% in at least one quarter. And because of that, it would be unusual to happen in conjunction with an increase in labor cost, but it's possible. We've already seen these calculations on a couple of our clients where they had an okay Q2, Q3, and had a really good Q4, or 2019, they didn't have as many people on payroll. And so do the math and make sure that you get the maximum PPP 2.0 allowed by law. We would encourage you to do the math both ways. Do all of 2019, do all of 2020, because you're not going to get your application in here before the end of the year. So your 2020 total receipts will count and see which one has higher. Now, I want you to note this 2.5 here. Unfortunately, fitness businesses are not included in the 3.5 times average monthly payroll. Restaurants, accommodations, food services, they must have had better lobbyists. And I cannot believe, I'm so upset with our representatives for not identifying fitness as one of the struggling industries. But restaurants are going to get a chunk more. All of food services, they're going to get a chunk more. And look, they could have done takeout. They had outside dining. I'm not saying that they weren't also injured. Everybody's been hurt, but I think fitness lobbying groups really missed out on this one. I cannot believe that with all the restrictions, the recreation services were forced upon us, just straight closures, outright closures, that restaurants are going to be able to get this 3.5 times average monthly payroll, and we're not going to get this. A huge miss, in my opinion. I just don't understand how fitness businesses didn't get pulled into this 3.5 and get the ability to do this. But again, these are lobbyist things, and I would love to say that we have control over this and have a voice, but it's clear that our representatives don't listen to us and hear the pains that we're going through. So that's PPP 2.0. I think this is the one that everyone's going to be really excited about. If you could do some rough calculations now and try to understand, are you going to get 10? Are you going to get 20? Are you going to get 30,000 or more in PPP 2.0 funds? And that should help you budget. But these funds are going to take a little while. Applications will open up in, I'm guessing mid-January. I would imagine it'll be late January until funding comes through. We're not expecting that mad rush again with the greater than 25% reduction in gross receipts for a quarter. We're not going to find as many people taking advantage of this, but there will be a chunk of people going after this, but I don't expect it to be the rush as it was before. So, breathe a little bit, maybe reach out to your banker that you reached out to before in a week or two, give them some time. They don't have any of this information yet either. They certainly don't have the applications available. We'll keep you posted. If you follow our blog and our YouTube channel, we'll let you know as soon as we know when you can start submitting for this. So there's more in this program. There's more in this 5,000 plus page bill. I did read through a good chunk of it and was able to pull out a lot of these pieces that have been helpful. It will be helpful for you and your colleagues. So SBA 7A loan payments that were made for 6 months in 2020. Sorry about that typo. Those are now going to be tax exempt. And so your payments were made typically from March or April through September, October, depending on when they were able to intercept your first payment. They made SBA 7A loan payments for you, which was great. However, like everything in the tax world, nothing is really for free. This was going to be taxable income to you. We weren't sure how to handle it with our clients. We've been waiting maybe for something like this to happen, and I wasn't expecting it. So this is a nice little pleasant surprise, and we don't have to recognize this as taxable income. You can imagine, if you have a sizable SBA loan that has $2,000 or $3,000 principal and interest payments that you could be recognizing $30,000 or $40,000 in taxable income. That is now not the case. So this is not taxable to you. It's tax exempt income. It does make your tax return more complicated, but that's something that your CPA can handle at tax time. Probably charge you a little bit extra. There'll be probably another form involved, but they'll be able to handle that for you. SBA 7A loan payments will be made for another 3-month period. This is really going to help everybody with their budgeting. I'm a little bit confused why everybody on the 7A program would be able to participate in this, but this seems to be the case right now. They're going to give blanket free loan payments for 3 more months beginning February 1st of 2021. This is also tax exempt income. So if you have a $3,000 or $4,000 a month SBA payment, you just scored yourself $9,000 to $12,000 as they're going to make the loan payments for you. So that's a pretty strong win for a lot of people. I know our fitness facilities, people are doing build outs, they're buying lots of equipment, they have these SBA 7A loans, and the payments are painful. If a lot of my clients didn't have these payments through the pandemic for the loans, they might be doing okay or be able to skate by, but it's the loan payments, I think they're the scariest thing for folks that have put a lot on the line, taken on debt. If it's not an SBA 7A loan payment, they're not going to help you. So if you have equipment loans, if you have other different types of loans, unfortunately, you're going to have to figure that out with that loan provider, maybe get on a deferral program so that you can pick back up when the vaccine starts circulating and things start to return to normal. And they will. They're definitely going to return to normal. And so it's official. These 3 payments here are also tax exempt. You won't have to pay tax on that income as well. If you are having trouble even after them making the 6 months and the 3 months, the SBA loan deferrals are going to be available for up to 1 year on an as-needed basis. So if you're currently making a payment and you don't even know how you're going to pay January, or when they start making your February payment, you don't know how let's boost that cash flow. Put it in a deferral. Get that cash, put it in your pocket. Worst case scenario, you can go ahead and pay down the loan once COVID passes. But I'm recommending contact your your lender, contact your bank, and let them know that you would like to take and participate in the loan deferral program. It does say on an as-needed basis, but I can't fathom, that criteria is going to be very stringent. I think if you just reach out and let them know that you've got some tight cash flow, it shouldn't be a problem. Below this, we've got this targeted EIDL grant for $10,000. It's basically saying if you were able to get that $10,000 but you didn't receive it, you may apply for it now. Really strict criteria. I'm not exactly sure how this one is all going to work out, but here's what we know so far. You previously have to have applied for the EIDL loan. That just makes sense. You have to have 25 or fewer employees, as that would be your typical full-time equivalents, is how things have been working. So if you have 40 employees, but half of them are part-time, you would qualify, for this. You'd be able to get them in there. If you must have suffered an economic loss of 30% or more. Previously, we had a 25% number. The way this law is written, it says 30%. And then you have to be located in a low-income community as defined in 45DE of the Internal Revenue Code. Who even knows what that means off the top of their head? So that's why you have me. I went and researched it. There's the link. It looks like you can get on a mapping system and figure out who potentially falls into that group. I'm guessing it's going to be few and far between. And many of you hopefully did receive that $10,000. But if you didn't, you can check it out, see if you're in this area. These are the people that they're going to apply first for this targeted EIDL grant income of $10,000. More on that probably in developing guidance as it comes out from the U.S. Treasury. We have a few items that need a little bit more clarity. There is potential for increased EIDL loan amounts, but it remains very unclear at this time. There is funding for EIDL in this bill. That is true. What it remains unclear is where those funds are supposed to be dispersed. I know if you didn't receive the full $150,000, you can go back and ask for more money. Say they approved you for 90 or you only took 90, but you now need to go back and get up to 150. You can go ahead and do that and go through the process. We have clients who've done that successfully very recently. We have clients who are continuing to go through that process now. It does take a bit of work, but it's possible. But for those of you who borrowed 150 and maybe went through it or think you'll go through it, can you get an around two? Can you get more than 150? Very unclear at this time. For right now, I have to say no, but there's potential that the U.S. Treasury leverages this money to do another type of EIDL loan or allows you to go over the 150. Expanded and retroactive employee retention credit. This one is interesting that we need a ton more clarity on, but it looks like a credit may be available during a quarter if your business was forced to close at any point during the quarter and or revenues were reduced by 50% and you paid wages during this period. Previously, this employee retention credit wasn't available if you took PPP funds. Now they're saying, go ahead and use this and go ahead and use the PPP. We don't mind if you double dip. And so we're looking for more guidance here, but it looks like we may be able to go back to quarters in early 2020, throughout 2020. And if you were forced to be closed for even one day during that quarter and or you had revenues reduced by 50% or more, then for that quarter, then you may be able to get this employee retention credit. This is something that tax accountants are mostly going to be executing on and helping you with. I'd say right now it's a little unclear. We're waiting for more guidance and practical examples from the U.S. Treasury on how we can go ahead and implement this. Everybody's kind of looking back at early 2020 going, I think we could qualify for this. Now, as we get into late 2020, people are saying, we're open, we're making it work. But certainly we have clients right now in California who are literally forced to be closed this month. And so they might even qualify for fourth quarter to get these employee retention credits. So we'll keep an eye on this one and we'll keep you updated as we hear more guidance from them. Overall, it seems like there's a lot of great news here and something for everybody who continues to struggle through the pandemic. I know our industry, the fitness industry, has been hit exceptionally hard. We want to give you a friendly reminder, be kind to your bankers, your accountants, your CPAs. It's all been a really challenging time. And so we're expecting conflicting reports. I'm probably going to change some of the stuff I said here and have to give you guys an update. And we're going to be working over the holidays and New Year to keep you up to date. And just as a general rule, be kind. I think this year has been really hard on everybody. So, just be nice and kind. We're going to make it through this together. We'll get to the other side. And as before, if you have a question, go ahead and fill out our contact us form. If you're a client, just email me. I'll be able to answer that. But we're trying to help as many people as possible. It's our Merry Christmas present to you. There's no strings attached. Just fill out the contact us, type your question in the box, let me know, and I'll go ahead and answer it and get you an answer as soon as I can. One of our company values is give first, and then we figure out the rest of it later. And so that's my attempt to help the industry. And just so many people are struggling, and we want to do what we can to get as many fitness businesses to the other side of the pandemic as possible. Until next time, I'm Eric of the Fitness CPA. I hope you guys got value out of this video, and we'll talk to you again soon.